Good afternoon, everyone, and welcome to Stock Market Today for Friday, March 6th. It's Alissa Coram here. And weakness continues in the major indexes as oil continues to spike. Joining me now to talk about how to handle current market conditions, what we want to see from here, and how history can guide us is my colleague, Mike Webster. Mike, as always,
Hey,
great to see
it's
you.
so great to have you back. Again,
Likewise.
I'm going to say
Yeah.
that every week. I don't know, for a while, till I get sick of saying it.
Well, I appreciate it so much. It's great to be back with you. We've got a lot to get to today, so let's do it. First, let's take a look at the major indexes, and we will start with a look at the NASDAQ composite, down 1.6% Friday. And taking a look at the intraday chart here, we did have an attempt at a move off lows earlier in the session, but some weakness once again coming in late in the day, tech driving the selling, Webby finishing close at session lows. And for the week, now we're at a key long-term support level. More to come on that. And the S&P 500 on Friday down 1.3%. We are getting close to that low from a couple of days ago where we were able to come off lows, not so much today. The Dow down 1%. You don't really care about that. I know that much. And the Russell 2000 down about 2.4% by sessions close today. And this had been holding up better. So now starting to see weakness in
Mhm.
a number of the areas that up until a couple of days ago had been holding up pretty well. So what do you make of the action this week, Webby?
I think it's a very dangerous market, and that's what I said, earlier this week on IBD Live, I believe. Or it's been such a
Mhm.
long week. This week feels like a year. Lots of devastation out there. Let's go to the VXUS, something I was in and something I got hit in. But more importantly, this is so broad based. So this is the rest of the world, excluding the US, market cap weighted. And could you go to that gap down and how much we were down on that
Mhm.
day? I
Yeah,
just
by the
can't bring.
close, which was well off the low, down 3.5%.
Yeah, and that's a very good point. That's after bouncing way off the lows there. That really is bothers me more than any of the other charts out there, because when you have just this global kind of, I don't want to call it panic, because we're in this situation that is really bad, and it has lots of ramifications economically. We're not going to talk from a standpoint of humanity. We're just going to talk about how it impacts the market. All these unknowns. We don't know how long it's going to last. Nobody knows. Like President Trump doesn't know. The folks over in Iran don't know. Everyone else, no one knows. This is a big unknown. So as you're going in, if let's say you're a big PM running 100 billion plus, and you're kind of looking at your risk of everything, what the Fed's going to do, what the economy's going to do, inflation, and so on, you
Mhm.
have this big unknown. And so it just means that this risk is there, and so you don't want to pay the same levels that you had in the past, evaluations, PEs or price of sale, however you like to slice it. So people, cut way back, and they did it really quickly. Like that was really, that broke that chart, because it had been trending so nicely, and it was such a low ATR. It was kind of the perfect. Yeah,
Yeah.
when you can see it on a weekly, when it jumps out at you like that, is something that's so different. It just tells you that it's so unique that you typically need time. Now, let's go back to the daily for a second. That sure, we could get some news over the weekend where everything is resolved. Let's say, Iran just says, okay, I give up, and it's over. Well, then things could revert, or should revert right back, and then go back up to those levels. but that chart wouldn't look right. You don't normally go straight down and straight back up into new highs. In fact, that was a sell signal that Bill O'Neill, the founder of IBD, came up with for individual stocks. When you break badly and then you go straight back up without basing, that it is just it's a sell signal. So from that mindset, you almost don't want that. You want it because you want things to get back to where they were, but it wouldn't really look right on the chart. And that's why we're going to look at some historical examples in a second. Now, what's good about this chart? You did, when you broke that badly on the gap down, you bounced up. You almost always come down and test. And it's like, how much do you test that low? So testing it today and then closing up off of it, that's a good sign, but it still looks like this one is kind of a magnet. There are always magnets out there. Sometimes it can be a round number, it can be a 21 day, a 50-day. In this case, the magnet, I believe, is the 200-day that folks want to see how it handles itself around there. And we talk a lot about the 21-day because we're active traders and swing traders and active position traders, and that works really well for that. But the institutions out there, they look at the 50-day, which is your red line, and the 200-day. So people who don't even look at charts are always aware, are you above your 200-day? Are you not? Is the 50 above the 200 or not? And what is the slope of it? So
Mhm.
we're with the Nasdaq coming into the 200-day. This is like the biggest test, and it's really not that we're coming down to the 200-day as much as the 200-day is coming up to us. And on a weekly, that black line is a 40-week, with coincides with the 200-day. So
Mhm.
yeah, I like how you stepped back there, and you can kind of see that rather than falling down to it like we did
Mhm.
right there, it's just kind of went sideways. It caught up, and then we had this little
Right.
um, you know pullback here. Now let's go to the SPY on the weekly as well to kind of see how different that looks. And it just has this different feel, but still sideways and then pulling down. And it just seems like that's where the market needs to be tested.
Mhm.
Let's go to the daily on S&P. So here it didn't hold up as well as the Nasdaq did. Like, so just look at, I just want you to look at pretty much like three dates. Today, where it closed, the high that we had 2 days ago, that blue day, and then the low from the upside reversal. So those are the points that you're looking at. How low did it get? How high did it go up? And then where are we now? This is in a much weaker position than, let's go over to the Nasdaq for a second,
Mhm.
because you can see that if we're looking at one of our 50% retracement charts and you were looking at it just for that time frame, you can see that the Nasdaq is holding up better than that. Now let's go over to where the leadership truly had been. Let's go to IWM that you brought up before. I mean,
Mhm.
that's not finding any support. That just fell out of bed. There, it had a little flat base and fell from there. MDY was holding up a lot better before than even that one, and that broke its 50-day. So, as Bob Dylan once said, everything is broken. Um, you know that song, I know you
Of
do.
course.
So let's go to EQAL,
Yeah.
which is the equal weight of 1,000 stocks. So it's a really nice way of looking at how our large, medium, and large and mega caps equally weighted doing. And this is, kind of the best from a standpoint of the moving averages. So
Mhm.
you're still a mile away from your 200-day. Your 50-day is still in a nice, has a nice angle. So, your 21-day is flattening out a little bit, but that's because we're looking at the exponential version, which you should. And so it's starting to roll a little bit. If the simple version would be a little bit flatter, but we don't have to look at that. But in those 3 points that we talked about, that's a problem here, right? Because you've got that low, you've got the high from the day after, and then where are we now? So that's an even weaker position. So it's telling you your average stock is in a weaker position than your
Mhm.
Nasdaq. So might as well look at mags, because that's your mega caps that had been out of favor for so long. And this, even though it looks terrible on that, just looking through that lens, it looks very similar to the Nasdaq. So what does that tell you? It tells you that where the money had been flowing, which is basically everything but mags, and more so on the medium side, medium and small large side, that now that's not even holding up, and so you're just going into the things that are kind of beaten down, and weren't participating. That's not healthy. That's not the type of environment that you want to be in. So again, it's very dangerous market right now, but that can change on a dime, and especially with this has been a news um, generated situation. Sometimes it's not news, sometimes it's just the economy, it's earnings, or earnings and the economy together, but sometimes it's a news event, just like if you think back to the Cuban Missile Crisis back in the day in
Right.
this in the early 60s, or post 9/11, or any of the, or you can go all the way back and study World War One, World War Two, and there's a lot to learn from the big wars, but we're not in a big war. Like, it's not a World War Two or World War One right now, where it's more, there's lots of smaller conflicts that you can point to and look at. And frankly, the market tends to react on balance in a positive way with those. The problem here is the impact that it has on energy is one of the big things. So let's look at USO, one of the many ways of looking at things. Let's go to the weekly on that,
Mhm.
because that's, I guess I was bearing the lead. I mean, that's what's going on here. That this,
Right.
and you got to think of the environment. We were in this focus on employment as well as inflation. So this causes problems, right? Because this, as prices go up, it flows through into inflation. So then you've got that problem that the Fed is going to have to deal with. And then on top of that, we don't know for sure how the next Fed is going to be, who they are going to be for sure, until that's a done deal. Um, so much uncertainty in a breakout like that. Let's go to the monthly, because when you can even see it on the monthly, like it's just jumping out at you, that's when a trend typically changes. But then again, this is news related, and it's big time news. So as much as that went up, if things revert or they pull out some rabbits out of their hat in DC and figure out some things to get this back in the right direction, well, that's the risk, right? That will change everything. That's why I'm just not just piling into energy stocks right now.
Mhm.
That would have been the place to be like a week ago, but now at this point you're up there and you've got a lot of risk. So there's massive risk everywhere. So we're going to focus in. Let's go back to the Nasdaq and kind of go where we started. That we're right around that 200 day. And that is the key of how we handle it around there. So why don't we look at, I gave you some historical examples. Why don't we go through these chronologically? We're
Mhm.
going to go through them rather quickly. So I would suggest that people jot down these dates, or if you don't have a pen right now, or you're driving or something, just listening, just go back and replay this and study these. Go into Market Surge, do a change date, and look at each one of these. So I was just in what you can do. There's a lot more dates than this, but I couldn't look at every last one. Go through, um, zoom out on your market surge, so you can have you don't do that, but I'm telling folks at home, when you go and do this, zoom out and just do a change date. Go every couple years or so, and just focus at times when you were in a bull market, and then you come down somewhat close to the black line, the 200 day, and
Mhm.
focus in around that. That's where your eyes should go. That's where we're at here. You look at that setup, it looks very similar to now. Those
Does.
3 points that I was talking about, the low, the high, and then the low. Now, the difference is that low wasn't an upside reversal, but you can't
Mhm.
get everything you want. But let's see how the next day plays out. So there, it looks like a magnet to the 200 day. And there you go. So that's normal and natural. You're waiting for something like that to trade against. Now, if you're following the system as Bill laid out, or the IBD methodology, you would wait for a follow through day, which we can talk about in a little bit. But if you're very active and you're at least looking for something, an upside reversal, that gives you something to trade against. So you could buy it there with a line in the sand at the low of that day.
Mhm.
So now you see what ended up happening. And if you waited for a follow through day, no problem. If you waited to get back above the
Mhm.
21 day, no problem. But you're just giving something up. And so there's also nothing wrong with just waiting for the follow through day. In fact, that's what folks should do. And that's if Bill were here, that's what he would be saying to do is wait for a follow through day, buy at least something on the follow through day, see if it works, and then get in deeper if you're getting positive feedback. So this one ended up working. Let's go to the next one.
Mhm. And really quickly, for those who are new, follow through day, we're looking for a rally attempt. Then you start counting off of your low, your day one rally. Then on day four or later, it doesn't have to be on day four, but day four or later, most typically, there's a few very rare exceptions. You're looking for a notable gain. And traditionally, with some volume behind it, volume heavier than the prior session. I know you're not looking at volume. And right
Hmm.
now, we're looking for a gain of 1%, correct,
Yes.
Webby? It can change depending on
It can
how
either
the
be
action.
one or 1.25%.
Right, right.
So
Right
now
now, we're using
people
1.
think that you need this 2 or 3 or 4% gain. They haven't looked at charts. I'm just telling you. So I've studied every follow through day in
Yeah,
history many, many times. You don't need this big gain. If you wait for that, typically you're going to have had a smaller one earlier, and then you're going to miss that better
yeah,
entry. And when we circle back to our current market and the follow through day in spirit that I talked about last week, I think that'll be a good example, but we
great.
can just remind me and we'll look at that.
Okay.
So on this one, you would see, okay, let's count them. You've got your first day, which is your
Mhm.
rally day. That's day one, day two, day three. Those are you're watching them, and there's ways to interpret it, but that's not the key. The key is that next day would have been your follow through day on day four. And like you said, they
Mhm.
can be the 10th day, the 12th day, they can be the 28th day. Um,
Mm. And this is nice
so
because it also got above that little resistance area.
You have such good eyes. Exactly. And so you're looking at key levels as well as key moving averages. And so I look at the
Mhm,
green line, which is the 21 day. So if you don't get a follow through day, you still pay attention if it's
mhm.
getting above your follow through day. And I'll use that as my fail safe. So
Yeah.
we can go to the next one.
Okay, the next one. So this was, I don't know if I verbalized it. This was January 15th, 1996 that we started with. Now let's go to 7/11 of 1996.
Okay. So a, a different look because our current market, the 200 day was catching up to us. So this one isn't exactly the same because you're falling down to it in a big way. Still worth looking at, and you can see in January the 978.17. That was the one we were just looking at. If you can point to that on the chart as well for folks.
Can you repeat that?
The 978.17,
The
the
97817. Yep.
January,
Yep.
the date that we were just looking at right there. Yeah.
Yeah.
So that was the last example. And so people can see how that played out. And then it eventually rolled
Mhm.
over. So now we're back down to the 21 day and or the 200 day. Let's see how this one plays out.
Okay, so we're going to fast forward to 8/2 of 96.
Okay. So this is what you don't want to have happen, obviously, but is really in the cards where once you get to the 200 days, so many people have their kind of line in the sand there where they just back out of everything. Then you've got to see at what point do they support it. And sometimes it's a lot lower than you think. So I know there's a camp they want to be patient, they want to hold and everything. This is why I wanted to show this.
Yes.
This could be in the cards, even though it eventually ended up bouncing up from there. But look at the devastation that it had. And again, that bottom day, that would be your day one, even though it didn't close up, it closed up in the upper half. No, the other one to the
Oh,
that
yep,
one.
yep,
Yeah,
yep.
that's your day
Mhm.
one. Then you go
Mhm.
up to, you don't get a follow through day, and then you're waiting, and then one of those days is your follow through day. When it's lower in there, it's kind of a weird position, but again, you can always use the green line, which is your 21 day. So
Mhm.
let's go to the next one.
Okay, we're going to go to 11/22 of 96. So this is how that ultimately
Yep.
played out.
Yep.
Okay, next on the list, let's go to 10/27 of 1997. So 10.
and there's a reason why I'm focusing on the 90s because I do believe, as we've talked about, and Ropes has talked about, and other people have talked about, that we feel that the the best parallel we can either go back to like the railroads back in the day, or we could go to the internet. You know, some big game changers, or even you could look at when the airlines came out. But this is an even bigger game changer. The whole AI thing is probably the most similar with what came in the 90s, so it's a worthwhile time to study. So this again, kind of like the last one, was falling out of bed, falling down to the magnet of the 200-day. So a little bit different, but let's look and see how that played out. Okay, when you have such a bad day like that, this feels more in the camp of what happened with the VXUS than what happened with the Nasdaq. Really bad break, and you get that upside reversal. You've got to be careful when the upside reversals are this wide, that you've got to think you don't know that you're wrong until you get down to that low of that day.
Mm,
So you got to be
mhm.
careful buying on a day like this, because your risk is enormous even if it ends up working out. Let's see how
Right.
this one played out.
And you and I have talked previously, we've looked at historical precedents. Once you get this kind of volatility, it can take a while for things to calm down in your daily ranges to get better. But let's see what this shows in
Oh
terms
oh
of
my
that.
gosh, it's so nice to have you back, because that's exactly what happened, and that was
Yeah,
exactly my point, and we never talked about this. People,
we did it.
folks watching, that's how
Yeah.
good she is. She knew what I was thinking.
Yeah.
So the
Takes one to
problem
know one.
I
Go ahead.
so the thing here is that point that she was just making. And lots of times you'll come down and test that ultimate low, or sometimes shake out below it, or at least get close enough to it that you probably would have um, sold anything that you would have bought. This is the point. This is why I'm saying it's dangerous.
Mhm.
This is more normal than not after a bad break. And again, it was more the global bad break that I'm concerned with, rather than what was happening here in things like the Nasdaq. So it's a time element where in
Yeah.
that you can get chopped up a lot. Let me just tell you, I've been chopped up a ton since October, and we were going up. You get in a place like that, you're got to be very, very, very careful. Let's go to the
Highway to
next
the
one.
danger zone?
Oh my gosh, I like that. Look at the music
Okay.
reference.
Let's go to
That was from Top Gun, right?
yeah.
Yeah, Steve Stevens played the guitar
Yeah.
on some stuff on that, and he was
Very cool.
from. You're right, Billy Idol. Okay, so now we had one successful test there at 1715. Now we have
Mhm.
another one down here. Let's see how this one ends up playing out.
Okay, we're gonna go to the next day, 8-7, bounced up to
Okay,
the 50, got rejected a little bit there.
and we can keep going.
Okay, we're gonna go to 10-14.
Okay. So, you can see you were trying to get support. You're stuck underneath your 50-day, which is your red line there. That's a very important one to look at. And then when you the key on this is when you ultimately broke through that 200-day, man, the what you were talking about is the volatility afterwards. That just really
Mhm.
expanded quite a bit. And then that was, I think it was like 33% down to the low. That was uh, really severe action, crazy action. But let's see how it played out.
Okay. The next date that we're gonna go to is 12-18 of this year, 98.
Okay, this is what I want everyone to remember, and so you don't like shut your computer down and stop looking at stocks, because if you do, at some point it'll turn around. In this case, it was weeks or months before that happened. But if you weren't building your watch list, you wouldn't know the things that were holding up better. Let's go to
Mhm.
Charles Schwab, because it's the poster child for this time frame. This is one that Bill made a ton off of. And look at the difference there from the 2108 shakeout in the handle versus your bottom there, the 1850. And look at
Mhm.
those two dates. And what was the date of the 2108? Just do a track price to see what the
Yep.
day is.
Let's do the track price there. That was on 10-8.
Okay, so now look at those 2 points and look at the ones higher than the other one. And then now let's look at the NASDAQ.
Mhm. So 10.8
Yep.
was that low.
Yeah.
So
And
you
you
can see
see,
that
that's a
divergence.
positive divergence, and that's what Bill was doing there. He was
Mhm.
looking and saying, okay, well, the stock held up when the market took another low. So if we take
Right.
another low, you want to see which stocks are lifting in
Right.
that time frame, because that's where the best ones will come out from. And I think we have
Mhm.
another date or two.
We do. So let's go to the 2010s. We're going to go to 5 6 of 2010, not 2019. There we go.
Okay, so that was
And
a
not
flash crash.
Schwab. There we go.
So that was
Flash
a
crash.
flash crash, and it kind of felt a little bit like, now that was more of a technical thing than news the way we had it. There wasn't news that was doing it; it was just this fluke thing that happened. But the point is that when you changed character,
Mhm.
you needed time, and that's something you picked up on. Let's go out to the next dates.
Okay, we're going to go to 520. Tried
And
to bounce, got
DC.
rejected.
Yeah, and so this is very normal to come back down and test that original one.
Mhm.
That's normal and natural. Not fun in this case, but normal and natural. And the next date,
Okay, we're going to go all the way to December of 2010. And there you can see in context of what played out.
I don't want to be a bearer of bad news, but if we break, badly, underneath the 200 day, you probably are going to need this time. So let's just hope for something that we don't get into that situation. But got to be honest, this is what can happen. But
Mhm.
it's all up to the news, really. Do we have one more? I think.
Yep, yep, 2014.
Okay.
4/11 of 2014.
So this one feels more like what we've been in, right? Where the
Mhm.
the 200 days kind of catching up at the same time it's coming down a little bit, and that had been trending up nicely. Then it got a little choppy in there. Let's see how this one plays out.
Okay, we're going to go to 415, upside reversal right at the 200 day.
And that's what you're looking for, and that's what we're hoping for next week, that you come down, you touch it, you could even undercut it a little bit, or sometimes you don't even touch it, but you get close to it, and then you get that support there. That's what you'd like to see. Let's see what happens.
Mhm. Then we're going to go to 7/1 of 2014.
Perfect. Now, but you still had that time element in there of
Mhm.
things kind of having to settle down. People had to believe it again, and again, it's not one of those things where it goes down sharply down and then straight back up. There's
Right.
this time.
Mhm. So, with that being said, now we'll circle back to our
Mhm.
current market.
Yeah. So with this, now that you have those fresh in your mind, you go, okay, when this one at this point doesn't look as bad as those, that's because we're still above the 200 day. And hopefully we stay that way. In a perfect world, we'd come down to the 22,000 next week, um, have a shakeout, upside reversal, and go from there. Now, if we get great news of the weekend, we are in position to have a follow through day. So what is that? The We had our low, our pink rally day. So it wasn't up on the day, but that was our day one. Then the next day was up, day two. Today was day four. So on day five, as long as we don't undercut that low, we're still counting. You're counting until that is breached. The closer you get to that, the more likely it's not going to end up working. But still, it's still intact, and you've got to have an open mind. That's why you've got to run custom screens, which we have some to share later in the show, to look for names to buy if we do get a follow through day,
Mhm.
and you preferably get above that 21 day. But that's what you're looking for. That could be in the cards. You want to be open to anything at all. Let's go through that follow through day that I was talking about last week. And if you could point to
Yes.
that day. So it was a follow through day in spirit. It was your fourth day follow through right there. And with the low from 4 days before, that was your day one. The close below that low was below the low of the follow through day, was your signal that that one was going to fail. And that's where that ended up happening. But there's two ways for it to fail. A close below the low of the follow through day almost always, um, anything that you bought on the follow through day, you want to reverse at that point. And then a piercing, and that's a close. You can intraday go below it, but not on a closing basis. But the 22,256
Mhm.
76, that level, once that
Rally
is
day.
breached, the low of your rally day, that then it kills the whole thing. So that's just how follow through days work. Most follow through days fail, and that's fine. It's still a very good way of getting into the market, because what ends up happening is that you then have a line in the sand. So let's just, might be confusing to people if they're new. If on Monday we get an up day of 1% or more, and you have your volume and everything behind it, where the volume is higher than the prior day, that's the part of the system that, then it's saying a green light to try to make progress. So you buy something in position. That's why you got to do your work. You don't have to buy a lot. Sometimes Bill would have us just buy 1% position, like
Mm.
max invested 1%, if the market was in a really dangerous place and we hadn't been doing well. So there's nothing wrong with that, but you just got to buy something because it changes your mindset. And then if you're making progress from there, then you get in deeper. But until that happens, you just you just continue to play defense.
Mhm. Great guidance there, Webby.
Sure.
Shall we take a look at some
Yeah.
ETFs now?
Yep. Go ahead.
Okay, so we have a list of some sector ETFs. This, of course, not quite as comprehensive as what Webby and Justin have been doing. So, what we recommend, of course, is for you to go through that sort of universe list of ETFs to really add color to your analysis of market conditions. We're just going to highlight a couple of things here. One ETF of note. That's the Defense Tech ETF, SHLD Shield. We'll take a look at this on the weekly chart. Great relative strength line, up 3.2% for the week.
I think that's the best looking ETF out there right now. Unfortunately, it's news
Right.
driven, right? Because if even though it's been doing well before this news, you got to believe a lot of people are in there buying because this war could be a long time. We don't know. We've seen other wars really extend over a long period of time, and that means, a lot of money going into these companies to just continue, like even just replenishing what is being used. So
Mhm.
that's why this is doing well. Looks great, but it's just like buying an oil, buying XOP or anything like that. They look great, but a certain news item, and you've got a ton of risk. So,
Mhm.
and it's gap down risk, which is
Right.
kind of spooky.
Yeah. So you have to be really careful with your timing and risk management if you are to play these news driven things like that. Okay. Now, for the rest of them, do we just want to go
Yeah,
through
just you go
sort
through them
by
quickly. Yeah,
what do you want to sort by worst or
you pick
best?
it. Dealer's
Okay. Well,
choice.
I guess since we've already done the best staples, we know this is a very defensive area. Something we were talking about on IBD Live this morning was the fact that this week you started seeing a rotation out of that, some of these defensive areas. Webby pointed out mags looking a little bit better relatively. Let's also go to the energy sector, still holding up well in this market. But a lot of these energy leaders are well extended, and you do have that news risk. Here's a look at the biotech group, keeping pace with the S&P 500 as it consolidates, builds a new base. Um, so this is an area to watch perhaps for some setups, though we know that there are so many different kinds of companies within this group. It's not the same as typically historically your chip sector, which really moves together. These have their own elements and factors at play individually most of the time. Sometimes though, they you do see those bigger group moves. Okay, utilities also a defensive area, though we have talked about the AI utilities element. I think this is interesting to see that explosive move in the early February timeframe and an orderly pullback so far, it looks like, and that relative strength line is at highs. So this continues to be an area to watch, I think. healthcare. A number of your defensive growth stocks can come out of this sector, but it does look like we saw a bit of weakness here, undercutting the recent lows of the base. Next, we have the communication services, some of your tech in here, and look at that relative strength line, seeing that improve in the last week, week and a half or so. So we know the some of the biggies in this ETF from the Mag 7.
But
Real
you
estate,
also have
yeah,
things like the AT&T and T and the Verizon and things like
of
that, but
course,
they're much smaller, but they're
weightings
hanging in there,
wise.
yeah.
But yes, yes, yeah, the telecom for sure. Real estate, not an area that we typically traffic a whole lot, but it is holding up here after a nice move in that late January, early February timeframe, but coming off a little bit this week. The industrial sector has been a great performer since December. Bit of a pullback. Will we see support around this 50-day, 10-week line? And will we see setups from some of the leaders in this sector develop perhaps some add on buying opportunities or some new bases? So that's something to watch there. Financial sector not looking too great here. Webby continuing to see that relative weakness in the chart. Consumer discretionary, your Tesla and your Amazon are in here. Looking at those recent bars, you talked about the low from earlier this week versus where we closed today. You can see a teeny tiny uptick in that relative strength line, but it's not at highs. But this week, a little bit of progress. Here's the materials seeing a bit of a rotation out of this area that had been strong heading into the last week or so. Here's technology. I'm seeing a very similar chart to the NASDAQ composite, of course, right at that 200-day line, a battleground area. We'll have to see how that plays out. Home construction, of course, we know this is very tied to interest rates. We're seeing this pullback quite notably here in recent weeks. ARC, I'm seeing a little bit of outperformance since the low in late January or so, but there's a lot of damage here. But at least in the immediate short term, perhaps a little rotation into this area, but I think it's all a matter of looking at the individual names in this group, doing a little bit of research, seeing what some of these ARC type growth stocks, how they're performing, if there are any setups that are quality, because I think that's key instead of just trying to buy strength off lows. We're looking at jets here. This is the airline, seeing that come off quite a bit, of course, with spiking oil prices. And then here's a look at the chips. I think this is also notable. Webby, one of the techie AI areas that was looking very, very strong. Now we're seeing a little bit more damage this week. And with today's close, Friday's close below that upside reversal day for the market earlier in the week. So seeing some relative weakness as the week progressed. And then last but not least, Bitcoin. We were seeing some glimmers of hope, perhaps for bulls as this is trying to make a turn, but coming off on Friday for the week, still up, but quite off the highs. Still a long way to go for the crypto trade. Anything to add?
Some ugly charts, man.
Yeah.
Really, like, really. I mean, you
Yeah,
just
I
gotta
agree.
call it the way you see it. It's like it just and things can change on a dime. It only takes a couple, one good
Mhm.
shakeout upside reversal can make a terrible chart look great. So you've got to be you you have to look at reality, but you also have to be very open-minded to change. And that was a really good thing. The Bill was a great role model for both of us in his ability to just change on a dime, be super bearish, flip to super bullish, or super bullish, flipped it super bearish, and not care about what you said 30 minutes before, 3 days before, 3 weeks before, just living in the
Mhm.
moment, observing it and adjusting it. And reality is a lot of
Yeah,
broken charts.
exactly. But you're so right. One bar, a couple bars can make a world of difference sometimes potentially, but I think it goes back to your point of really doing your homework, keeping your lists up to date, and as our friend Ed Carson always says, to write your watch list in pencil, not pen. So that way you can
Well, you gotta love Ed. He's
that
great.
way you can keep updating them.
Yep.
All right. Good stuff. Let's
Want to
take
look
a
at
look at
some
a
watch list items?
Yep.
Okay.
So if it's watch list time, let's take a look at some watch list names and let's go to the weekly time frame. Here's LHX. This is in that defense sector, seeing an RS line blue dot, but a strong uptrend from going back to last spring, a couple of bases along the way, and it is now testing a new potential buy point with an RS line blue dot.
Yeah, one of the best looking things out there that's liquid and quality because not great earnings, but solid earnings. And you've got the RS line blue dot there, which is showing that the RS line is at new highs as is breaking out of that base, which is a good sign. It's a base on base. You got a really nice shakeout week last week, support at the 10 week. You got all these things that are going for it, with the exception of two things. One, the market is terrible, but stock doesn't care. That's what the RS line is about. But it's in this area that, let's just say, it resolves itself over the weekend. It's a possibility. I hope for humanity's sake and the economy's sake, the worldwide, I hope for everyone's sake that it gets resolved over the weekend. Well, this probably goes down. Now, shouldn't go down because they're still going to have to replenish everything that, and there's going to be more focus on defense. But the reality is the original, you'd probably have a sharp sell off in energy stocks and in oil as well as the defense
Mhm.
stuff. So it's still in my opinion, it's just building your watch list and then seeing. And I think this is one of the best looking
Yeah.
ones out there. Let's go to the daily just on that
Oh,
real quick. I'll be
sure.
very brief. What you want to focus in on is, how does it handle itself on days where the market isn't looking good. Today's action closing at the highs, getting support at the 21 day. And you can see, even though it was too short for pattern rec to pick this one up, but it was forming this little kind of flat base thing that it broke out of. And it's still, this is not a broken chart. This is hanging in there. It's kind of forming like a little high handle-ish type of thing on this thing that's too small to be a traditional cup. But in the face of the what's going on in the market, you can see this is being supported nicely.
Mhm.
We can
Let's
move on.
go to Cava. Was
So
beaten down, but a notable turn on this most recent earnings report.
yeah, so let's go to the weekly. This has been a dog, right? I used to love it, then I hated it. Always hated the food, but I'll eat there if I have to. But it's what's nice about this is that it's not a tech stock, it's not an AI stock, it's something else that it's on its own, and it wasn't participating during the whole AI move. So it's different, and you do want something that is different there, that the market could fall apart in this one or just chop along, and then something like this, not necessarily a restaurant stock that is a turnaround, but just something that hasn't been participating, is more likely to have a shot in that environment. Is it viable right here? No, not at all. Is this something that I want to watch to see how it sets up here? Yes. And that's what this is about right now. It's not necessarily, finding things that are in position, but things that are showing signs of strength. One other one that we weren't going to talk about was figs. I just pull this up because I was just thinking of things that aren't in people's mind. Let's go to the monthly on this one, because this
Mhm.
one has been a dog, like a real dog, but it's a little bit in a different situation than Cava. That it was a dog and it broke that downtrend a while back. And let's go to the daily on
Mhm.
this one.
Mhm.
That
And the
what's nice,
fundamentals are now it's showing up again in the
that's
fundamentals.
that's the thing. Well,
Yeah.
you always figure it out, even though we didn't talk about this, that acceleration up to that 900. And that's what I wanted to
Mhm.
point out, that breakout of that structure there and holding in there. This now goes on my watch list, and it's, they have scrubs, unique scrubs. They took something that was just this generic a commodity and they put their own spin on it. I think that's genius.
Mhm.
So this is something I'd be looking to buy if it sets up. It's not set up yet.
Okay. And same for the Cava.
Yeah.
Let's go to Imax. Orderly pullback after an earnings fueled breakout.
Yeah, if we weren't in this environment, I'd be buying this today. A little mini upside reversal at the top of the, pulling back into the top of the base in a gentle way. The RS line looks solid. And again, it's something unique that's not wrapped up into everything else. So
Right.
these are the types of names I'd put on my watch list.
Great. Okay, let's go to your charts, Webby.
Okie doke. Let's see. And I'm on my laptop, so hopefully this all goes smoothly. Um, okay, can you see that?
I sure can.
Okay, so this is the Bob Weir. Take a step back, look at the bigger picture, weekly candles, and we're going to go through a bunch of charts. We're going to go through them rather quickly because the market is terrible, but
Yeah.
we want to kind of just paint a picture, let each one speak for itself, and then afterwards you kind of put them all together and figure out what you think of the market. When you look at this candle, terrible candle. Why do I say it's a terrible candle? Because you've got this really long top wick, meaning it traded all the way up there, but it closed all the way down here. And you've got a negative body, meaning you opened here for the week and you close here. That's as bad as it can be. The only thing that makes it look not worse is the fact that we at least closed a little bit off the lows there. But this is a candle that you would expect it to go lower. That's what it's telling you. Doesn't mean it's going to, but that's your expectation. Um, oops, sorry.
No problem.
Okay, so here's the Nasdaq. Now, yes, it's a blue body. Yeah, so that's got has that going for it. But still, it's a tiny blue body. Look at the relative to this week or this week or even this week or this week or any of the other ones. It's not saying much. And that top wick is just terrible. Looks way better than SPY because you had that shakeout and then close up over here. So it looks like it might want to go higher or sideways, but still not a good look. And then the IWM looks terrible. It looks worse
Mhm.
than S&P.
Mhm.
And this is the one that's really bothering me. Global markets looking that bad. That's problematic. Okay, that's a
Mhm.
VXUS. Now we'll go to the next one. This is just showing you the old regressions. And when we threw this out over here in early October, you can see that sometimes they can come back and bounce up and never get back into that old channel. Let's see how our recent ones look. So this one is dead. We were trying to give it some time over there because it tried to poke back up into this area, into the green area, and now this one is dead. And again, this is our we talk about it every week. It's your regression lines. We're going 50 days starting on November 21st is our first anchor point. Our second anchor point is here, and I can't. It looks like I think it's February 4th, but I've got
Yeah.
something in front of it. So that's the trend, and your white line is what we call home base. And
Mhm.
when you stay within the red and the green, you're still in that trend. When you fall out of it in a big way, then you say that trend is dead. This trend is dead. We're waiting for a new trend, waiting on a friend. Let's take a look at the composite. Okay, so this one died over here. We're waiting for a new trend here. We don't have one on the NASDAQ. Let's take a look at the IWM. That one is broken as well. As I said, everything's broken, but there is one that's not broken. Let's take a look at the EQAL. This one is actually, if we hadn't looked at the rest of everything else, again, EQAL is the U.S. market, the
Mhm.
largest 1,000 stocks, equally weighted. This is picture perfect. I just got to say, if we get back above this green dash line, then that is where you'd want to gun it on this
Okay.
particular instrument with the assumption that you're going to get back through your white line because it wants it to go back to home base and then probably get back up into here. And so this is the best looking one. And it was looking really good this whole way until, the last few, until this week. But that's, That's the story of everything, really. Okay, so here's the 50% retracement. Still using the same old lines that I had from back in October and November timeframe. We're still in the northern hemisphere, barely, so that's positive. Again, just calling it the way you see it. Nasdaq is back in the southern hemisphere. That's not where you want it to be in this context. You want it to be over the 22,959 and change, and it's not above there. Let's look at the IWM. We had some different ones on there. We were using the dates here more recently in the January highs and lows, and you can see you're back in the
Mhm.
lower area, not where we want to be. Next is our levels. I've cleaned this up a bunch just to make it a little bit easier for people to read. But at home, if you want to put a bunch of extra lines on there, there's nothing wrong with that. It's just you got to balance out the noise. So the lows from this week, that's vital. And then the green up there, that's our goal that we want to get to, because obviously pretty much the day after this bad day, those highs, you need to surpass that, because if we see some strength here, but we run out of gas there, that's
Yeah,
more of a short than a long.
right.
Let's take a look at the Nasdaq. This one again, the lows from this week, and then the lows from this area over here. So the 21,898. Those are levels that you don't want it to break, and then of course that would be underneath that 200 day. So that feels like it would be a magnet to that. If I were looking at this, I would say, you'd want it to test this level to see if it can really hold or not. Um, but
Mm.
we'll see how that plays out. Let's take a look at the IWM. This one I need to clean it up some more, but that one looks like it's in trouble. It's just going through, all those lines. And our next line here is the 24 or 245.86. Okay, next, I know over the last couple of weeks I was showing you my new indicator. I'm so sorry. I'm traveling. I'm out to at my folks' house out in California, and the indicator didn't get moved over to my laptop because I messed up. But you can visualize this. This is all the fib moving averages. So you've got your 3, 5, 8, and so on, exponential moving averages, and you just want to look and see what direction is that going.
Mhm.
And right now, it's going in the complete wrong direction. Next time I won't be on next Friday, but the following Friday I will be on, and I'll have that indicator. And in fact, I did a Webby Rambles on this chart, this setup, the fib charts, as well as the indicator, and that will be coming out next weekend. So not this weekend, but next weekend. And I'm going to do a full episode on each one of these charts so people can kind of understand the
That's great.
methodology behind it. But this is terrible. This is not what you want to see. You don't want to
Mm-mm.
see those moving averages rolling over. Let's look at the NASDAQ. Same thing there. Same thing with IWM. Same thing with basically everything. Here's the VXUS.
Like a, melting rainbow.
Yes, exactly. And I did change the colors to rainbows
Yeah, I noticed
for
that.
fun. Now your
Mm.
favorite chart, the keep it
Yeah.
simple, just the 21-day exponential. And here you're looking, you want your low above it. Well, we don't have that. Our high is underneath it. That's really a problem. Same thing with the VXUS, same thing with IWM, same thing with basically everything, MDY, you name it. So let's look at our other ones. Just one sec. Um, got to share my other screen momentarily. Okay, can you see the Webby RSI?
Yep.
Okay, so with this one, you've got now, because your high is stuck underneath there, you've got this burnt orange. What is that telling you? You're telling you your high is a little bit more than one ATR average true range underneath that 21 day. You want to see a wall of blue like we had over here, and that is with your low above it. It's just an easy way to visualize that. This chop here where you've had, some blue, then nothing, some orange, then nothing, that's telling you that the environment that we've been in. Let's take a look at the NASDAQ. have a lot of problems there because we've got nothing but orange going on over there. Let's take a look at the IWM, and you've got that big spike up there. You can see that now the high is well underneath that, is about 1.7 or so, um, from that very problematic. Let's take a look at the VXUS. And ooh, man, that is bad. Or almost up to three
Oof.
ATRs underneath there. And look back over here, that got up to 4.8 or so. Let's look at our Bob Marley. One, this is my daughter's favorite one, and I've got to say, I'm so proud of my daughter. I did ask her if I'm allowed to say one of the reasons why I'm out here this weekend is she's doing a marathon, her first marathon.
Amazing.
She didn't even run
Amazing.
like less than a year ago, and she started running, and she's like, I'm going to do a marathon. Why? Because she's a Webster. That's what we do.
Love it.
Okay. So this one is measuring um, your low on the bar versus your highs, and measuring that in terms of ATRs. How do you use this? You look at the general areas, the green areas, 4 ATRs within your high, yellow is 4 to 8, and underneath that, the red is more than 8 ATRs. So this one, that's one way to look at it, is just the area you're in. The next level is seeing where does it tend to get support. This one was getting support right around 3 ATRs off your high. So 3 ATRs here, about 3 ATRs here, a little bit less than 3 ATRs here. And now we're going through that. So it's telling you it's getting worse, but not terribly worse. If this were to get down into this area, then that's problematic because, we got support last time about 4.5 ATRs off of our high back in the November timeframe. So that becomes a very key level as you look at this particular chart. And the same thing with the Nasdaq, it just keeps inching lower, a lower low, lower low, a lower low, a lower low. That's the opposite of what you want to see. You want to see higher lows. And we'll take a look at the IWM. And this one is taking out those lows as well. So you hit a low here, lower low here, lower low here, and a lower low. Again, the opposite of what you want to see. And that's that's all she wrote.
For that segment, but then we're gonna
Oh
now we're
shoot,
gonna
I'm
talk about
sorry.
some
We'll be fast.
screens.
We'll be fast.
Okay. Yeah, walk us through, Webby, some screening. Here's the first one that you built.
Okay. So we wanted to have, normally at the end of these, I just kind of just say, oh, do these screens. So I built
Verbally,
these.
yeah.
Yeah, I built these earlier so it would be easier for everyone to build. So you can always watch this, pause this, and build this in market search. Very simple screen. This isn't for stocks to buy. This is for your watch list. So if we get a follow through day, you would know where you should be looking. So what do we have here? Very simple. No ETFs, some decent liquidity, $75 million volume. You really wouldn't want to go below $25 million volume. Those are my kind of two go-tos. Above 10 bucks, you can put that higher if you want. At least 3% above its 50-day, at least 5% above its 200-day. You could even increase that 200-day a little bit more to 8 or 10%. 1% above its 21 days. So it's holding, so it's above the
Mhm.
long term, medium term, and short term moving averages. Um, this next one this is a secret weapon, the RS line within 5% of new highs, 52-week highs. The RS line at new highs is great, but it's very temperamental because it'll just be that one day. And so when it's near new highs, that's really what you're looking for. It doesn't always have to be at fresh highs. So use that a lot. That's one of my favorite things to use. Don't talk about it much. The next thing is the ATR. Can you click on that so folks can see that?
Mhm.
Um,
Absolutely.
so that I have actually have a min and a max in there. So I've got a min of 1 and a max of 8. Why? The one, anything less than 1, the stock is probably being acquired, and so it's just a little flat little line there, so it just saves a little bit of time. That's not the perfect way of doing it, but it gets close enough. The next one is 8, meaning that on balance, it trades less than 8% in a given day. You want some of your screens to have things like that, the ATRs. Some of them you don't. You just want to see what's going on because there's some heat and stuff that you won't get if you put that cap on there. So there's screening is an art, and so you want to know how to look for it. ATRs will help a lot. If you're looking for quality, quality will have less volatility because people know what to pay for it. So in this environment, I'd be looking at really four and less of an
Mm.
ATR. Next thing, this week, we just don't want something that fell apart completely. So at least up or not down more than 3%. If this was giving us too many names, we would have raised that up a bit. Closing range, where did it close within this week's bar?
Mhm.
40% or higher. That's kind of a key level there. So you only have 46 names. That won't take you but a blink of an eye to look at.
Mhm.
Let's look at the next screen. Okay, same thing. No closed-end funds or ETFs. Lower this one down to 25. Same $10. This one I was more lenient with the 50 and the 200 day, just above those, but a higher closing range. So there's a balance. You raise some things up, you loosen some things up when you do screens. So the closing range on the other one was 40%. This one is 75%. The last one was for the week, couldn't be down more than 3%. This one, you had to be at least up on the week. And this one, we don't have a top for our ATR, just a low of one. I would run both of these. Don't look at them separately. Merge them into one list. So just build it, run the list, put it into, run the screen, put it into a list, and then run the other screen, put it into that same list and play through it. That way, if a stock is in both, you don't have to look at it twice. And that won't take you long at all to go through. And at least you'll see everything that's lifting up. I would also look at the growth 250 as you should do every day. I was
All right.
fast.
Great
I
job.
know you've
Any
got a baby to go see. Come on.
Yeah. So any final thoughts or is that it?
I just wish everyone safety in the market and in life. Just be really careful out there. This is a time where you can really get hurt. I mean, I had a really bad week. I'll just be frank about it. I got really caught in a lot of things on that bad day. And when you do that, there's this instinct to want to just try to make it back. We all have to fight that.
Mhm.
And then when you're feeling that, which we all feel, I feel it, you just go, let me look at my instruments. What are my instruments telling me? Do I have a follow through day? Am I above the 21 day? All these things that we talk about. Or did I have a major upside reversal, something to trade against? Until you have those, everything else you're just doing, you're just hoping. And hope isn't a great strategy, especially in a risky environment. There's times to be risky, there's times to be very safe. This is a time to be on the safe side of things. I will say this weekend, I have the most special Webby Rambles on that I've ever done. I open up about things I've never talked to
Mhm.
anybody about, and it's about my journey. This Monday was 3 years of on my health journey of kicking Diet Coke and kicking alcohol and a lot of other things. And I talk about it and finding your reason for doing that. So maybe you don't have a problem with those, but you have something else that you want to accomplish, or a bad habit that you want to get rid of. I would highly suggest watching it. It's on my YouTube channel, Webby 5150.
Dropping tomorrow?
Dropping tomorrow at 6 a.m. Central Time.
Great. Yeah, I watched your preview of that on X. So,
Oh, okay.
yeah,
Thanks.
yeah.
It's
So,
heavy stuff. And I used to
mhm.
be a heavy person, and it's about my, losing over 80 pounds in a blink of an eye, and those things. I think people will learn a lot
Incredible.
from it. So
Yeah,
it's
really well
yeah. I
done.
hope people watch it.
Yeah, great. Well, we're also very lucky that you are so transparent and willing to share not only all of your secrets with the market, but all of these personal stories as well. You have so many people out there who admire you so much and who are rooting for you. So I just think it's awesome to have that YouTube channel for everyone to go check that out. So
Thank
thanks so
you.
much
So
for
hey,
sharing.
wait. I know you've got to go see your baby, but what's the latest? Anything cool this week?
Anything cool this week? She's just getting better and better at rolling. So, yeah,
Maybe she'll
we're
be a
we're so
gymnast one day.
excited. Maybe. I don't know. Maybe.
It
We'll
was
have to
6 months.
see.
That was it. 6 months this week or last week
Uh
or 3 months?
roughly a week ago. Roughly
A
a week
week ago.
ago.
Okay.
Yeah. Yeah.
Yes.
She's a cutie. We love her so much.
Awesome.
I will keep updating you. Anything notable. All right. Thanks everyone so much for watching, and thanks Webby. Have a great weekend. And we'll see you back here next week, everyone. Investors.com/IBD live starting 10 minutes before the opening bell on Monday. Investors.com/IBD live for all the details on that. We'll see you there. And then we'll see you right back here Monday after the close.